Dan. Tariff announcements spook Indian stock markets. Investors lose 7 lakh crore rupees in 4 trading days. We explain what's worrying Indian markets. But Trump's tariffs on steel, aluminum could have a negligible impact on India. Estimates suggest about $1 billion worth of losses is the most that India will suffer. Meanwhile, gold has breached the 87,000 per 10 grams mark. What's driving up gold prices, and will the trend reverse in the near future? We try to get you answers on the show today. On to some corporate headlines. Bhavish Agarwal-led Ola Electric's losses widen in the third quarter. Stock slips almost 10 rupees below its listing price of 76 rupees. Agarwal says break-even will be achieved at 50,000 units a month. That's more than double the scooters it sold in the month of Jan this year. And if you're taking a flight out of Delhi, well, variable tariff surcharge could be hitting you next. That's something the Delhi airport has proposed. Business class travelers could shell out more, and peak hour travelers across all travel classes between 5 to 9 a.m. and 5 to 9 p.m. may also witness surge pricing. And Swiss luxury watchmaker RADO clocks high growth in India. India is now the biggest market for the company. Let's start with the top story this morning. Prime Minister Narendra Modi is in France to co-chair the AI Action Summit along with French President Emmanuel Macron. French President Macron hosted a dinner in the Prime Minister's honor ahead of the AI Summit last evening. It was attended by several high-profile leaders, including US Vice President J.D. Vance, who's also in France for the same summit. The Indian diaspora in France turned out in large numbers to welcome the Prime Minister, chanting his name amidst drum beats at the airport. The highlight of Prime Minister Modi's visit is the AI Summit, which aims to strengthen global governance of artificial intelligence. PM Modi and his foreign counterpart Emmanuel Macron will co-chair the summit, which will be joined by several global leaders as well as tech industry executives. The main aim of the engagement would be to explore AI-driven advancements for public good. Well, the summit is expected to kick off in a few hours from now. So on the show today, we'll try to find out what India's AI challenges are and what priorities should India make when it comes to both AI deployment as well as AI development. Some of the key questions that we are asking on the show today are: in this huge battle between an expensive US-based OpenAI versus a low-cost Chinese DeepSeek, has India missed the sweet spot of building its own foundational AI opportunity? Moreover, should India be limited to back-office IT efficiency using AI and really use it as a tool to be integrated along with the IT services we offer to the world? Will the Indian cost arbitrage advantage, which lasted well for the IT services industry, last long enough for AI as it develops further? Now, AI for social good is something that the government has been talking about. What exactly is that social good, and what's the roadmap for achieving it using AI? And finally, it's not just about building foundational models, but building the ecosystem. India needs skills, chips, data centers, in addition to AI models. Are we getting there, and will we get there in the right time? Joining me to discuss this and more, I have with me Manish Maheshwari as well as Anurag Ramdasan. Gentlemen, good morning. Thank you so much for joining us on this very important day. Manish, let me begin by asking you, I think, the most basic, obvious question at this point. We have the OpenAI model and we have the DeepSeek model. Has India missed its opportunity of building a large language model, foundational AI opportunity? Has that been lost?
So my view here is, I think it's too early to say that the game is over. I think the game has just started. And I think we are going to see a lot more innovation and a lot of things will happen. India may not have been fast to to move, but my view would be, it's a long game, so it will move far, I would say. And things have just started. I think there was one view, mostly in the valley here, is that building a model requires a lot of capital. Capital is the moat, and people need to have a lot of money to build this. I think what DeepSeek has shown is that what really is the moat is the creativity, and you can have a smaller investment, but you can organize and figure out things in a way which is far more creative, and you can distill the learnings from existing models and build something which gives similar or even better performance at much lower cost. So my view here is that, India needs to catch up, but the game has just started and we are going to see this thing happen. India does have several advantages, and I think it has to has to leverage that advantage. I think if you think about any kind of AI model and other tools that are coming up, you require three things, right? One is, of course, the data sets to train.
Yeah.
And India, by virtue of its large population and I think all the Digital India mission, we are collecting huge number of data, whether it's healthcare data, agriculture data, traffic data, etc. So that data sets we have, and I think that can be used to train models which are very specific to India. Mm-hmm. The second is the algorithm or the code, which also I think in my mind, India has amazing talent and a lot of engineers and a lot of people who understand machine learning and statistical learning, and they can really build great models if they can put their attention and focus on this. The third is, of course, the GPU and the chipset. That is where I believe the government should play a much more important role and sort of prioritize that, and I think also enable an ecosystem where we start becoming self-sufficient. Having said that, no one is self-sufficient in that case. There's only one company, NVIDIA, which controls this market globally.
Yeah.
The question would be, everyone is looking for an alternative and everyone's looking for another way to do it. So India is also not far behind there. I think it's the right time. The iron is hot now. Now is the time to strike. And the fact that Prime Minister Modi himself is leading this summit and has put his face on top of it, that shows that he does accord it a national priority. And this has a significant signaling effect on everyone, right? Everyone will see him talk about it, which will then cause the bureaucracy and the entire ministers to also prioritize it. It will also send the right signals to entrepreneurs and investors to sort of look at those kind of companies. And think about it, like DeepSeek came from nowhere. It's not a government-funded or Chinese government-funded entity. It's a private company which came out of hedge fund.
Yeah.
So nothing stops Indian entrepreneurs to also build something like this. It's only a matter of time. And if you look at it also, among the Indian diaspora, many of them are already building it. If you look at Perplexity in the US, built by an Indian. It's just that, they happen to be in the US. The question would be, how do we create a similar environment in India so that Indians living in India can also do something similar or even better?
All right. Anurag, do you share Manish's optimism? You work with startups, and what Manish is saying is that the game is afoot. The game has only just begun and the iron is hot, and this is the time to actually strike it. But the game is also moving fast, and the catch-up that India will have to do, you catch up with one technology, and by the time you're getting somewhere there, the technology has evolved and moved into a completely different direction. So what is the kind of conversation that you are having with enterprises, with startups, and are we really on the track, if not the fast track, are we even on the race track to play the catch-up game?
Very, very good question, Karthik. So the way we think about this is, look, this is a generational shift in technology, right? This is not a 6-month long phenomena. And if you think about how this started, OpenAI was the biggest player, and then you have Anthropic, Mistral coming in. We thought the game was over. Suddenly, DeepSeek shows up. So it's, I agree with Manish that it's not a done deal. There is a lot more to play out. And look, India has also, got its own trajectory to develop in this market, right? India does not have the kind of R&D budget proportional to GDP the way other countries have. And if you look at any big technological shift, India has never been a first mover, right? So we weren't the first in, say, IT services. We weren't the first in pharmaceuticals. We weren't the first in the space race, right? But we've moved very well once we've gotten into the space, and we've become dominant player over time. And this trajectory will play out in the AI space with India also. We see a crazy amount of capital going in the last year. Over a couple of $1 billion of capital went into AI startups in India. We see a massive number of entrepreneurs building in this space, especially the entrepreneurs building in this space are thinking global from day one, which is again phenomenal. To Manish's point, we have unique data sets. We will have unique problems to solve for. So, the nature of foundational models are evolving. What problems they're supposed to solve is evolving, and India will have its own unique right to win. It will not be it will not necessarily be the same track as OpenAI or same timeline as OpenAI, but that doesn't matter. India has always sort of moved at its pace and established its credentials in these markets before.
All right. So, Manish, I want to bring a very direct question to you. What at this stage should be India's AI priority? Should the priority be to build its own AI models which are unique to India to solve for Indian problems, or start using the data sets that you were referring to and start deploying them for social good? So, do we have a roadmap really on what India's AI priority should be? Budgetary allocation, etc. notwithstanding, there's got to be still a roadmap, a strategic roadmap on what India really wants to achieve in its own AI tryst.
I would say it would be both, and I think government and private ecosystem have to work in partnership. So I'll tell you where the government has to play a role and where private entrepreneurs have to play a role. I think government has to create an enabling environment. I mean, in terms of like promoting, ensuring that the regulatory environment is perfect for them, they have the resources, and I think things don't slow things down. The second thing is, there's a lot of unique data sets pertaining to India that the government has. The question then becomes, how do you sort of use that and leverage that to build models that work for India and solve unique situations and unique problems specific to India, as Anurag was saying. So that's second. The third is, how do we build the kind of, urgency in the whole ecosystem around, how do we work together to make progress on this one? Now, both things have to happen, right? One is around like coming up with vertical solution to specific problems where you don't have to build the foundational models, but you can distill the learning from the models that exist and start solving very vertical specific problems. The second would be about building something which takes into account the unique needs of India, the sensitivities of India, the data sets of India. That also has to happen. And it need not require a huge amount of capital. It requires the right kind of creativity and right kind of entrepreneurial spirit to say, okay, what has already been done that we don't have to reinvent the wheel? What kind of learnings we can distill from that? And then add on to that, what kind of data we can inject pertaining to India and come out with something that solves the need of India in a much better way, not just more accurate and relevant answers, but also more cost effective, given the size of the problem and the things that we might need down the line. Okay. So it has to happen at multiple levels, right?
Sure. Anurag, let's get you back into this discussion. And, there are 3 or 4 key challenges that I feel India is still grappling with. Number one, the skills that Indian engineers have, the skills that India's, and India has made remarkable strides in its IT services industry, but the skills that Indians have need an upgrade. Then there is this whole question of building the entire ecosystem, and that begins with having foundries to make the semiconductors which go into chips. So Manish was mentioning NVIDIA has the global sort of monopoly on chips that go into and GPUs that go into the AI industry. But then India, despite its investments both by the government and by the private sector, the kind of chips that are going to be rolled out of India and the kind of semiconductors that are going to be rolled out of India are still many generations behind. And there's going to be a long gap and a large distance to cover before we can make relevant semiconductors that go into these GPUs. And then finally, you also have this issue of data centers. Now, while we've seen investments being announced from Reliance to Adani and everything in between, we haven't really seen the data centers come up at the pace at which the AI industry is evolving. So there are multiple challenges. I feel perhaps we need to prioritize these and really figure out where we want to build our expertise.
No, so fair question, Karthik. So three different ways that I would split this out, right? See, on the first part, which you mentioned in terms of NVIDIA having the state-of-the-art chips and India not having the capability, look, even the larger tech companies, right, the FANGs of the world, they still procure their chips from NVIDIA. So it's not like India is lagging, right? It's more so that NVIDIA is the only player in the market who's supplying this. Even right. OpenAI buys NVIDIA, Microsoft buys from NVIDIA, right? So it would be a bit of an unfair criticism on that front. The data center part, it's a very, very pertinent point. And I think this is where, government has the role of an enabler of infrastructure builder, and that's where, that role will come in handy. For example, with financial services, the government had very clear stance that you cannot host India's financial services data outside of Indian borders, right? And that led to a whole lot of data centers being built out by the large cloud providers in India. We will need similar protection for data for AI in India, and that would automatically, create the data center environment for GPUs and AI chips in India. And look, this is something that the government has done, time and time again with great effectiveness, right? I mean, the way they managed duties on certain components of, smartphones, which led to manufacturing of smartphones in India.
Yeah.
I think this is where government will have its most crucial role as an ecosystem enabler, so that the roadmap can be guided in a very effective manner. And the last bit, which is what kind of talent comes in, what kind of AI applications get built. I think that's something that the startups and the venture capital ecosystem will take care of on its own, as long as the rest of the infrastructure exists, right? I mean, I don't see a challenge in terms of talent being built out. We've seen many self-taught technology entrepreneurs in the AI space in India. We see Indian IT services adopting AI services as a platform and training their workforce in India. So in just a few years cycle, India will have enough AI talent. I don't think that's something to worry about. The same way 20 years ago, in a few cycles, India just got enough tech talent. AI talent will follow. I don't think that's a challenge.
All right, Manish Maheshwari, you're a Mason Fellow for AI at Harvard University. Compare the learnings at Harvard to what we teach students in India. And do you think India is on the right track to build that AI-ready talent from colleges and IITs?
I think the demand will determine the supply here. I think what I would say is that, as Anurag was saying, I mean, the talent skill set will have to change, right? If you think about it, India was predominantly a services company. It moved to a product company. We started, there was a need for product engineers, and I think people moved to that. I think even when mobile came in, there was a big dearth of like mobile engineers, people who could like sort of code on iOS and Android platforms. People learned that. So AI and sort of machine learning is no different. I think there will be tremendous demand for those kind of resources, and people would gravitate towards those careers. So the thing about India is that we have abundant talent, and I think they will get repurposed for that. The other thing I have noticed now is that AI will also change the requirement for talent and also the future of work, right? I mean, for example, the conventional thinking was that technology and AI would sort of make the more mechanical and sort of the blue collar work redundant. But what it is coming after is the sort of the more of the office work, right? If you think about the coding work and also the sort of the work that most engineers do, that can be easily done by AI. And I think what is required now is a bit of a more higher order work, saying what should the architecture, how should something be designed. But once that decision has been taken, the actual work of actually building something can be automated away, right? So that does have implication in terms of not only the skill sets required,
but even the job
quantity
market
of those skills required, right? So I think our educational ecosystem and sort of our mindset and thinking has to also evolve to take that into account. And having said that, at the same time, AI will also transform many other sectors, like for example, healthcare and precision delivery of like healthcare and diagnostic. That will change the way things are treated. Also, the way education is delivered can also be made more personalized and specific. We will also see things in India, for example, agriculture can be done in a different way now. With AI can bring a lot of efficiency in the wastages that is happening. So the whole ecosystem will start evolving around that. And I think the careers of tomorrow and people designing those curriculum and people and the students who are studying for those have to keep that in mind as they think about it, right? So that's what I would say. I mean, we have great talent. We require a different way of now repurposing that talent. And the talent also has to become mature in terms of, where is the best use of their time and attention and sort of their capabilities. Right.
All right. Well, let's leave it at that. Manish Maheshwari, Anurag Ramdasan, thank you so much for joining us on this very important story. Well, key highlights coming in through this conversation that India has the manpower, India has the skills, but maybe those skills need to be realigned with the AI mission. And of course, India has to double down on building its own data centers and building the whole ecosystem where AI enablement and AI development come through more organically. Well, let's leave it at that. Thank you so much for joining us. Time for a quick break, but on the other side, an update on how the Indian stock markets opened and the fact that Indian investors have lost almost 7 trillion rupees in just 4 trading sessions. What is driving the bears on the Wall Street? You're watching Morning Brief at 9.
Associate sponsor, New Virtus GT Line, style to wander.
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest.
Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense. They have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Look, and I'm falling for you like crazy. Ah, boom, boom. Every heartbeat is only for you. Every breath, every moment with you.
Shall we do it again?
My heart goes boom.
Unlimited Love. Bookings open on 14th February.
Hello everyone, this is Papon and I am coming to Dilwalo Ki Dilli this Valentine's Day to perform for the World Travel and Tourism Festival.
Mama must be missing us, na?
Let's take it one bit, give me one day. Feel the itch under my skin, it's a one day. You been like it when you see we end up, hey. It doesn't matter, just gotta get going.
New GT Line, Tygoon and Virtus. Volkswagen.
Welcome back. You're watching Morning Brief at 9. The stock markets in India opened just a few minutes back, and for the 5th consecutive day and running, Indian markets have opened in the red. Both Sensex and Nifty are down about 0.1% in early trade today. Remember, yesterday when the markets had opened, Nifty, despite it being a slow start, was still hovering in the 23,500 levels, down to about 23,350 this morning. Even the Sensex is just about holding tight at 77,200 points or so. Massive beating by way of the small cap index. The Nifty small cap 100 is down about 0.9% at about 16,500 levels. All of this as a result of the volatility in the Indian stock markets, which again is up this morning by about 2.5%, hovering in the range of about 15 or so. It's a mixed bag on the sectors. If you pull up the Nifty 50 heat map, we'll see that the IT sector is showing some green shoots today. Let's pull up the Nifty 50 heat map and take you through some of the sectors which are in action this morning. It's a mixed bag on the IT sector space. TCS and Tech Mahindra are leading this morning, down about 0.3%, but Infosys is up about 0.7%. And HCL Tech also up about 0.6%. Massive decline coming on HDFC Bank in early trade. HDFC is down about 0.8% or so. Reliance had a weak opening yesterday, but just about flattish this morning, up about 0.1% or so. Now, Indian investors have lost as much as 7 lakh crore rupees. That's right, about 7 trillion rupees have been lost by Indian investors invested in the stock market over the last 4 consecutive trading sessions as of yesterday. And with today's losses, those slides could be even further in the red. Now, On Monday, which is yesterday, the benchmark Sensex fell about 600 points and Nifty 50 moved near the 23,350 levels, and that is the opening for today as well. The overall market capitalization or MCAP of BSE listed firms has fallen nearly 418 lakh crore rupees from nearly 424 lakh crore rupees in the previous session, making investors lose about 6 lakh crore rupees or so just on the BSE. Now, what exactly is driving this downward momentum in India's stock market? First up, the obvious answer are Trump's tariffs. US President Donald Trump has been dealing blow after blow to market sentiments, not just in India, but across the world by way of announcement of multiple tariff policies. Now, the latest chip on the block was Trump announcing a 25% tariff yesterday on all steel and aluminum imports into the US. Trump further told reporters that he intends to introduce tariffs on cars, semiconductor chips, as well as pharmaceuticals. So that is keeping markets on the edge. Now, specifically on the Indian markets, there are stretched valuation concerns despite a correction in the stock market. The Sensex has corrected over 9% from its all-time high of almost 86,000 levels, which it hit on 27th of September last year. However, despite this correction, market valuation remains fairly high, keeping investors cautious. Then, of course, we had the earnings season. Quarter 3 earnings reported a weak earnings season, and a major factor behind the ongoing correction in the stock markets happened to be the Q3 earnings, which, while they were marginally better than the last 2 quarters, but failed to boost investor sentiment. Now, add to that, with Donald Trump in power and the strengthening of the US dollar index, there's been a relentless outflow of foreign capital. Indian markets have witnessed heavy FPI outflow starting from October last year all the way till Feb. In fact, so far in the month of February alone, and we're just sitting on the 11th of February today, foreign institutional investors have offloaded Indian equities worth 10,000 crore rupees and counting. Now, with the US dollar index strengthening, the direct impact is on the rupee weakening in respect of the US dollar. The Indian rupee hit fresh record low yesterday. It slipped 52 paisa to an all-time low, climbing down almost 88 rupees against the US dollar. The domestic currency has declined nearly 3% this calendar year alone. That's right, a 3% decline in the INR in the month of Jan and the first 10 days of February 2025. And all of this is weighing heavily on market sentiment. Some investors are continuing to say that the worst is not over yet, and the next 3 to 6 months should be waited and watched for. But it's not just the Indian stock market which is bleeding. Even gold prices have been surging across India and across the world. Now, the price of gold has been breaking record after record this year, continuing the rally from the previous year without any major pullbacks. Now, known for being one of the safest investments, the precious metal has been drawing strong support from investment firms, central banks, as well as retail investors, all leading to a remarkable rally in gold prices following the COVID-19 pandemic. Now, in early trade today, 24-karat gold rose another 10 rupees, with 10 grams of gold now priced at, hold your breath, more than 87,000 rupees. That's right, gold has touched 87,070 rupees per 10 grams. Now, on the other hand, silver has dropped about 100 rupees, with 1 kg now priced at about 99,400 rupees. The price of 22-karat gold has also seen a rise of 10 rupees, with 10 grams selling for 79,810 rupees. So what exactly is causing gold prices to go up? Well, the election, which resulted in Donald Trump becoming president of the United States, has provided a fresh catalyst for the rally as investors remain wary on the trade policies of his government and his pro-growth stance. Concerns that these policies could lead to inflationary pressure have increased the demand for gold as a strategic asset. Now, Trump's policies are geared towards boosting domestic manufacturing, supporting U.S. businesses, creating jobs for American citizens, and strengthening the economy. Now, in addition to all of that, Trump has also proposed universal trade tariffs of at least 10% on all imported goods into the US, and this also includes the precious yellow metal gold. This has spurred demand for physical delivery of gold futures contracts, with New York traders seeking delivery from London. The Bank of England, which holds one of the largest gold reserves in the world, is the second largest custodian of gold after the New York Federal Reserve. Now, according to recent data, the Bank of England's gold inventory began declining between November and December, indicating increased withdrawals. Now, India has been especially active in increasing its gold reserves over the last 3 years. Indian reserves grew from 754 tons in 2021 to about 876 tons in 2024, in addition of another 122 tons. Now, gold accounts for 11% or so of India's total forex reserves held by the central bank, the Reserve Bank of India. The RBI added 72.6 tons to its gold reserves in 2024, increasing its gold holdings compared to the previous year. The purchase places the RBI just behind Poland and Turkey in net bullion buying for a year marked by high currency volatility following Trump's election. Now, by the end of December 2024, the RBI's total gold reserves stand at about 876 tons, valued at over $66 billion, a sharp increase from more than 800 tons, valued at $48.3 billion a year earlier. This 72.6 ton purchase is the highest since 2021 post-COVID and the second largest in any calendar year since the RBI began buying gold in 2017. So, just to sum all of this up, gold prices have been surging and gold is at 87,070 rupees per 10 grams as of yesterday, which is the 10th of February. Now, in line with gold spot prices rising in global markets, which have seen the per ounce value of gold at about $28,000 or so. Now, add to this, there is global uncertainty. Gold is seen as a safe haven investment as stock markets stay volatile, and the stock market volatility coming primarily through the tariff after tariff announcement by President Donald Trump. And as investors rush out of stock markets, they find gold as a safe investment to invest their dollars in. Add to that the central banks, which are going big on gold. It's both China and India trying to race ahead. RBI, like I told you, added 72.6 tons in 2024, and in the month of Jan, another $1 billion worth of gold have been added already. Plus, Indians love gold. Domestic demand for gold increased by almost 5% in the year 2024 alone. Now, approximately 800 tons of gold is held by Indian households as of calendar year 2024. But for India, it's not just the surge in gold price, but there's also a double whammy, and that double whammy comes by way of the faltering Indian rupee against the US dollar. The weak rupee, which is touching record low after record low, is making gold imports into India even more expensive. So just if you thought that the peak has been reached and the surge of gold prices is over, well, not quite soon. Experts predict that gold in global market could rise another 7% or so from the current levels of about $2,800 per ounce to about 3,000 rupees per ounce. Meanwhile, US President Donald Trump has gone ahead and signed his order of imposing 25% tariff on all steel and aluminum imports into the US on top of the existing metal duties yesterday. Now, this has given another jolt to market volatility and uncertainty. Trump told reporters at the Oval Office that he intends to introduce tariffs on cars, semiconductors, chips, and pharmaceuticals next. Now, Trump's recent action could impact about $1 billion worth of Indian exports to the US arising out of the steel and aluminum industry. Now, India's steel export to the US is a minor part of India's total steel exports, and the US accounts for only 5% of the total exports from India. It is the aluminum industry, however, that faces a more significant threat, as nearly 12%, more than double of the steel imports, almost 12% of India's exports in the aluminum space are aimed for the US. Now, until November 2024, India's aluminum exports to the US stood at $777 million, which saw almost a 12% rise of the country's total exports of about 6.7 trillion in all of last year. However, a similar decision by President Trump during his first term in office in 2018 didn't really have much of an impact on India's aluminum exports. America's share in India's total exports has hovered in the 11 to 15% range over the last 10 years or so. While the US decision is expected to hurt Japan, Europe, Canada and Mexico, data shows that India may not be completely immune to second-order effects, as oversupply may bring down prices further, thus hurting steel manufacturers. And before we head into a break, let's look at some of the global headlines making news today. World leaders are in France along with tech giants including Sundar Pichai and Sam Altman as they meet in Paris at the US-China tensions continue to loom over AI safety talks. Following US President Donald Trump's announcement that he will go ahead and impose 25% tariff on steel and aluminum imports, global markets take a beating. But Donald Trump is considering exempting Australia from the new steel and aluminum tariffs after a call with Prime Minister Anthony Albanese. US steel and aluminum imports mainly come from Canada, Mexico and allies, with China's exports to the US limited by tariffs. Meanwhile, Nippon Steel reconsiders its decision to acquire US Steel, shifting focus to investment after Trump's announcement of tariffs. Tesla chief Elon Musk has made a $97.4 billion bid to acquire OpenAI, escalating tensions with CEO Sam Altman over the company's shift to a for-profit model. Sam Altman says no thanks. US stocks rise with AI and steel stocks leading the way, while Tesla dips after Elon Musk's $97.4 billion OpenAI bid. McDonald's surprises with strong earnings. That's right, we just told you McDonald's faces steep US sales drop due to E. coli scare and cautious spending, but growth in other countries helps balance the losses. And while major British petroleum shares rise 7% to the highest level since August after activist investor Elliott Management builds stake, pushing for transformative measures to boost shareholder value. All these stories on the other side of this short break. You're watching Morning Brief at 9.
Unlimited Life. Bookings open on 14th February.
Hello everyone, this is Papon and I am coming to Dilwalo Ki Dilli this Valentine's Day to perform for the World Travel and Tourism Festival.
back. You're watching Morning Brief at 9. A look at all the global stories in news this morning. World leaders and top tech giants are gathering in Paris for a high-stakes AI summit with nearly 100 nations present. The spotlight is on the US versus China AI race. Can they set aside tensions to shape the future of artificial intelligence? Well, Prime Minister Narendra Modi is co-chairing the AI Action Summit along with French President Emmanuel Macron. Here's more in the story.
World leaders and top players in tech are gathering in Paris for an AI summit. Events began last week when French President Emmanuel Macron announced a deal with the UAE to invest up to $50 billion in the country's AI infrastructure. This week, Macron is expected to announce further private sector investments totaling tens of billions as France races to match US and Asian rivals on AI. But someone else may steal the attention, even though he won't be there.
We always have the ideas, we're always first.
Donald Trump isn't attending, but all eyes are on whether the US can find common ground with other nations on AI safety. Since taking office, the new president has revoked predecessor Joe Biden's executive order on the subject. And Reuters sources say the US delegation to the Paris summit won't include staff from America's AI Safety Institute. The Washington team will be led by Vice President J.D. Vance. Top names from tech will be in town too, including OpenAI chief Sam Altman. Also there is Google DeepMind chief executive Demis Hassabis. Speaking in Paris on Sunday, he said it was right to set rules for the new technology.
I think it's important to regulate AI, but it's important to get the regulations right. And when that's hard when the technology itself is not fully understood and it's so fast moving.
He was also grilled on the impact of DeepSeek, which is set to be the focus of many conversations this week. That's the new Chinese AI model that has rocked assumptions about the tech by appearing to match or beat US rivals at a fraction of the cost. Hassabis says DeepSeek is good, but maybe also overhyped.
It's an impressive piece of work, and I think it's probably the best work I've seen come out of China. But it's important to understand that despite the hype, there's no actual new scientific advance there. It's using known techniques, actually many of the techniques we invented.
Reuters sources say a non-binding communique on the principles of AI safety has been under negotiation for agreement at the summit. The question now is whether that is something that Washington will be willing to sign.
Meanwhile, steel makers across Europe and Asia took a hit as shares tumbled following a major announcement from US President Donald Trump after he said he will impose sweeping 25% tariffs on all steel and aluminum imports into the US on top of existing duties. More in this report.
Shares in European and Asian steelmakers fell on Monday. It comes after President Trump announced on Sunday that he would introduce 25% tariffs on all steel and aluminum imports. And he's promised further announcements on Tuesday and Wednesday of broader reciprocal tariffs to match those of countries importing US goods. The largest sources of US steel imports are thought to be Brazil, Canada and Mexico, followed by South Korea and Vietnam. Meanwhile, Canada accounted for 79% of US primary aluminum imports in the first 11 months of 2024. Some have warned Trump's actions could first of all damage the US economy by increasing the cost of the raw materials it depends on. In South Korea, the industry ministry called in steelmakers to discuss how to minimize the impact of tariffs. Hyundai Steel shares dipped as much as 2.9% amid a broader decline among South Korean steelmakers. While European steelmakers, which account for about 15% of imports into the US, also took a hit. The European Commission said it saw no justification for the imposition of tariffs on exports, adding that it will react to protect the interests of European businesses, workers and consumers.
Meanwhile, Australia might be exempt from the US steel and aluminum tariffs. Addressing the media, Prime Minister Anthony Albanese said US President Donald Trump has agreed to consider exempting Australia after what he called a constructive phone call. This comes after Trump announced sweeping 25% tariff on all steel and aluminum imports, escalating the trade policies. Albanese remains confident a deal can be struck, pointing to Australia's key role in the US defense and job market. More in the story.
Presented Australia's case for an exemption, and we agreed on wording to say publicly, which is that the US President agreed that an exemption was under consideration for in the interests of both of our countries. I said to the President Trump that this was an issue of some media coverage in Australia, and that we therefore agreed on the words that would be used, that it was under consideration. That's what I'll stick to, but we'll continue to engage quite clearly constructively. But can I say this? It was a very constructive and warm discussion. I've indicated there's very positive support for the AUKUS relationship. I have no intention of speaking on behalf of President Trump. That is up to him. But quite clearly, I've indicated there's strong bipartisan support for AUKUS in Australia and in the United States.
So tariff in this new trade policy announced by the US. Let's take a look at who and where US gets these metals from and which countries are likely to be impacted the most. Here's a small breakdown.
Roughly a quarter of all steel in the US is imported from neighbors Mexico and Canada or overseas allies like Japan, Germany, and South Korea. Canada and Mexico accounted for almost 40% of US steel imports in 2024. 6.6 million net tons of steel mill products were imported from Canada, and 3.5 million came from Mexico, according to US Census Bureau data via the American Iron and Steel Institute. Brazil was the second largest source of steel imports to the US last year. While China is the world's largest steel producer and exporter, very little of that is sent to the US. Most Chinese steel was shut out of the market when 25% tariffs were imposed in 2018. Roughly half of all aluminum used in the US is imported, with the vast majority coming from Canada. At 3.2 million metric tons last year, Canadian imports were twice the next 9 countries combined, according to the US Department of Commerce. The next largest sources of imports are the United Arab Emirates, at around 347,000 metric tons, and China at around 223,000 metric tons. The US aluminum smelting industry is small by global standards. Total smelter capacity in the country was just 1.7% of the global total, according to the US Geological Survey.
And in all the talk about steel tariffs, Japan's Nippon Steel is reportedly rethinking its strategy of acquiring US steel, which it had backed away from in light now of these new tariffs. Chief Cabinet Secretary of Japan, Yoshimasa Hayashi, confirmed that Nippon Steel is considering a new direction in the form of investments and production of high-quality products demanded by the US and global markets. Following this, shares in Nippon Steel fell 1.5% yesterday. More in this report.
Nippon Steel has considered proposing a bold change in its approach to buy US steel. That's according to Japan's Chief Cabinet Secretary Yoshimasa Hayashi Monday. He told reporters the proposal was completely different from anything Nippon has done in the past. Hayashi said it would create a win-win situation for both Japan and the US. He cited investments and the production of high-quality products demanded by the US and global markets. On Friday, US President Donald Trump said Nippon Steel's $14.9 billion bid would take the form of an investment instead of a purchase. He commented further Sunday.
I'm not going to let another country buy it. We had a great meeting on that, but they are allowed to invest in it, and that's different.
It was unclear if the investment referred to a new deal structure or what the details of the transaction would be. Two sources said the biggest Japanese steelmaker had not withdrawn its bid. Nippon Steel declined to comment on Hayashi's update. It also said nothing on Trump's statement that no one can have a majority stake in US steel. Trump also said the US will impose 25% tariffs on all steel and aluminum imports on top of existing duties. Shares in Nippon Steel fell 1.5% Monday.
A consortium led by Tesla chief and billionaire Elon Musk made a staggering $97.4 billion offer to acquire the non-profit organization behind ChatGPT, OpenAI. This has deepened the ongoing tensions between Musk and OpenAI CEO Sam Altman, who swiftly rejected the offer with a response on X saying, "No thank you, but we will buy Twitter for $9.74 billion if you want." The offer comes as OpenAI transitions to a for-profit model, a shift Musk has openly criticized, especially after co-founding the nonprofit in 2015. Musk, who later founded his own AI company XAI, is now challenging OpenAI's new direction. In fact, on Twitter, or X as it is referred to now just a few hours ago, Elon Musk has called Sam Altman Scam Altman. And Wall Street's main indices saw a positive close, buoyed by strong performances from Nvidia and other AI-related stocks. The rally also included a major boost for steelmakers after US President Donald Trump announced plans to impose additional tariffs on steel and aluminum imports. Take a look.
U.S. stocks closed higher on Monday, with the Dow gaining almost 0.4%, the S&P 500 adding nearly 0.7%, and the Nasdaq climbing almost 1%. Metal companies flexed some muscle, with shares of U.S. Steel, Cleveland-Cliffs, and Alcoa all gaining after President Trump announced additional 25% tariffs on steel and aluminum imports. AI-related stocks gained, including chipmakers Nvidia and Broadcom, helping to lift Wall Street's main indexes. Despite some turbulence, stocks will continue to soar higher, said Jason Brown, president of Alexis Investment Partners.
We ended last year what we consider pretty fully valued, right around 6,000 on the S&P. But our targets for this year at our firm are in this sort of 6,500 to maybe even 7,000 range, so higher than we are today. We just also think with all of the uncertainty and all the various things that are going on, we're going to see an increase not only in stock prices, but also in volatility. And we have seen some of that so far. We just don't think that's inconsistent with the bull market.
Shares of Tesla closed down 3% after the Wall Street Journal reported that a consortium of investors led by Tesla CEO Elon Musk is offering $97.4 billion to buy the nonprofit that controls artificial intelligence startup OpenAI. Other movers included McDonald's, which jumped 4.8% after the hamburger chain posted a surprise rise in its global comparable sales in the fourth quarter. And shares of Rockwell Automation surged 12.6% after the automation products maker posted higher than expected profit for the fiscal first quarter. Investors now look to Federal Reserve Chair Jerome Powell's biannual monetary policy report delivered to the Senate Budget Committee on Tuesday and the House Financial Services Committee on Wednesday.
Well, that's all we have for you on this edition of Morning Brief at 9. Thank you very much for watching, but news continues right here on News 9.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every scene, every fold, is crafted with excellence.